All right, today we're diving into a pretty big statement from the CEO of Protext Mobility. You know them as TXTM. And look, this isn't just your standard corporate update. This is a message that's absolutely packed with signals about the company's future, and we're going to break down exactly what it all means. So here's what we'll cover. We'll start with what's kicking off this new chapter. Then we'll decode a really important term you need to know. After that, we'll look at leadership's huge bet, cover the promises they're making to shareholders, and then wrap it all up with the key takeaways. So, first up, let's set the stage. The CEO of Protext Mobility, Dylan Deploy, just put out this official statement. But this is not just business as usual. It's coming right on the heels of a really positive development for the company, and they're calling this a whole new phase of growth. And that's really the core message right there. The CEO is basically signaling a fundamental shift in direction. He's framing this as a new beginning, one that's built on transparency, accountability, and making sure the company's leadership is totally aligned with its investors. Now, to really get why this announcement is such a big deal, we have to understand a key piece of the puzzle. It all centers on this old Latin phrase that carries a ton of weight in the stock market, caveat emptor. So what is it? Caveat emptor literally means let the buyer beware. When a stock gets slapped with this label, it's basically a big public warning flag from regulators. It's telling everyone that there might be risks involved, usually because there's a lack of clear public information. It is a label that no company ever wants to have. And here's the kicker. Protext Mobility just had this caveat emptor designation removed. That is a massive milestone. It's a signal to the entire market that the company has sorted out the issues that got them the warning in the first place and that they're now operating with much more transparency. It really paves the way for them to get back to a normal trading status. Okay, now this is where things get really interesting. You know the saying, actions speak louder than words? Well, the company's leadership isn't just saying they believe in the company, they are putting their money where their mouth is. Just take a look at this number. Over 200 million common shares. That's how many the president and the chairman of the board have bought on the open market just since the beginning of 2024. This isn't some small, symbolic purchase. No, this is a huge, tangible investment, and it signals some serious confidence from the very top. And the CEO is very direct about why they did it. He says these purchases are meant to be a crystal clear signal that management and the shareholders are in the exact same boat, rowing in the same direction with a shared vision for long-term success.
But wait, there's more. It doesn't stop with the huge stock purchases. The CEO also went on to make several very specific promises to address common investor concerns and protect the value of their shares.
He laid out 3 really clear commitments. First, he's saying he has no plan to convert his own preferred shares into common stock. That's a big deal because it prevents a sudden flood of new shares from hitting the market, which leads us right into the second point. He guarantees no dilution risk coming from management. And third, he was extremely blunt about this. The company is not planning a reverse stock split. It's not even being considered. So you can see the strategy here, right? The statement takes 2 of the biggest fears that investors have, share dilution and reverse splits, and directly tackles them with pledges to protect the company's structure and focus on growing the business from the ground up. And then, on top of all that, the CEO threw in another personal commitment. He's planning to buy even more shares, and then, get this, donate a portion of them back to the company's treasury. It's a pretty creative way to help fund the business without having to take on debt or issue a bunch of new stock. Okay, so we've walked through all the details of the announcement. Now let's pull back a bit and put it all together. What are the most important things you should take away from this if you're watching Protext Mobility? When you put all these pieces together, you've got the clean slate, you've got the massive insider buying, and these direct promises to investors. What is the ultimate message that Protext Mobility is trying to send to the market right now? It really breaks down into 3 key themes. First, it's about a clean slate. That caveat emptor label is gone. Second, it's about leadership's conviction, backed by a purchase of over 200 million shares. And third, it's a clear promise to protect the value that shareholders have. And this quote from the end of the statement just wraps it all up perfectly. The CEO says his goal is straightforward: make the company stronger, protect the shareholders, and keep this positive momentum going as they head into this new chapter. So, all of this leaves us with one big question. You have a major regulatory cloud that's been lifted. You have the company's leadership making a very public and a very expensive bet on their own success.
So the question is, are we watching the dawn of a new era for Protext mobility?